Welcome to Profits in Practice. I'm Sarah Webb, the Managing Director of Webb CFO, and today I'm joined by Jan Robidou, one of our accounting managers. We are going to talk about all things fraud. So, welcome to the show.
Thank you very much. Glad to be here.
Yep. Excellent. Well, Jan is one of our very first employees, and we had worked together at a prior company, and I stole her when she was looking for a new role. And as an accounting manager, she helps us design systems and evaluate clients. But maybe share a little bit about your background from internal audit and why you are one of our, I don't want to call you a fraud expert because it makes it seem like you're fraudulent, but you help us definitely design systems and uncover fraud when it's happening.
Absolutely. So one of my previous roles at another company, at a Fortune 100 publicly traded company, was to be a senior internal auditor, which meant that I took about 70 flights a year and went to 20 different countries. But every month I would be in a different location for that company, go into that division, look at their books, their accounting records, and say, yes, you're doing good here. No, you're not doing here. And look for weaknesses in internal controls. So as long as we could identify some of those risks and those misstatements and correct them before outside auditors get there, then it's a win for the company as a whole.
Yeah. And it wasn't always that you were focused on fraud, but through these procedures, you might have uncovered fraud or seen things that you're like, this wasn't the right way to do this.
Correct.
Yeah. Well, tell us a little bit about, in accounting, we have a very, the fraud controls. We refer to it as the three-legged stool. Tell us about the three components of fraud.
So for fraud to happen, there have to be three components. So motivation and pressure, and then opportunity, and then rationalization. So with motivation and pressure, that can either come from internal of a company or external. So external pressures on an employee might be that they have a sudden financial change, like they have a family member who gets very sick and medical bills pile up, or they have a gambling addiction or something else that's putting pressure on them.
So it's that the employee is feeling like the only way I can solve this is through fraud of some kind. Like, I don't know what to do. I need some money. I have access.
Yes. And a lot of times they're not setting out, I'm going to commit fraud. They are rationalizing it in very small ways. Like, for example, I'm going to borrow this money because I need it to pay my bills today, but I'll put the money back next month before anyone notices.
Sure. Or could it be like, the company really owes me this money. You know, I've been working a lot of hours and I didn't get that bonus, or I'm not paid enough for my job. So they owe this to me, regardless if that's what their employee compensation is.
Absolutely. The employee is rationalizing it internally to themselves. So they're not necessarily talking about it with anyone else, but they're telling their self, it's okay that I'm doing this because I deserve it, or the situation is against me. I feel hopeless. I don't see another way out.
Okay.
Now, you can have pressure, particularly economic pressure. You can also have rationalization, but if you don't have opportunity to commit fraud, then the fraud won't happen. So opportunity refers to things like having access. So physical access to cash or to credit card information. It can also be the access within a system, such as being a check signer on a bank, having access to the banking portal.
Or maybe even technology, not having, you have too much access to something.
Yes, access to enter credit memos, and as well as record cash receipts, for example. Some of those things where you could commit the fraud and it's unlikely that someone will be able to identify it timely.
Yeah. In our team, we're not always looking for fraud. There's been, just in few instances where someone's like, I think fraud is happening. What we're seeing is when we're onboarding a new client and we're going through things, we're like, this seems odd that this is like this, or this person has too much control in the system. Because we work remotely and we're not there with the practice every day, or any small business, we don't see a lot of the rationalization and the pressure, but what we do see is the opportunity. And there's lots of design choices in the accounting system and how all kinds of systems talk to each other that would give someone an opportunity. And that's where we can step in and say, let's design this a little differently, so that not one person has this opportunity. What are some things that you see happening in private medical practices?
So, healthcare fraud actually falls under the white collar division of the FBI, and they have a lot of great tips on how you can design a business in a way to discourage fraud. So, medical fraud happens in basically three buckets, if you will. So, one would be medical providers or practice managers, one by patients or other individuals, and then the third bucket, if you will, is under prescriptions.
Okay.
So, medical providers or practice managers have a great deal of access to information within the clinic, such as access to patient information, billing records. Practice managers also are helping on the AP side with vendors and purchasing of supplies. So the types of fraud that would happen there under a practice manager would be things like double billing, which is when a service or a supply did actually happen, but you're sending multiple claims to the insurance company for it, or phantom billing, which is when nothing ever happened and you're sending it and trying to get reimbursement from an insurance company.
So they're going into the system and coding, I was here this day, I got this service, and it just never really happened.
Yes. Actually, this past week in El Paso, there was an article about this happening at a medical facility. And so that exactly was what was happening, is they were recording that there were tests that were happening and sending urine tests off for reimbursement from the insurance company, several of them, which individually doesn't seem like a big cost. And that's part of the risk here, is that a lot of fraud is not necessarily millions and millions of dollars all at once. It's little pieces that may not get noticed right away.
Yeah. And what about, you talked about that second bucket of fraud.
Yes. So the second bucket of fraud would be by patients or other individuals. So this would be things like ID theft, where someone is using your information and shouldn't be.
Okay.
So we've all heard of identity theft. We've not all heard of identity swapping, which is what I see sometimes specifically in the healthcare space as opposed to other industries. So identity swapping is where, let's say this person has insurance through their job and they're doing great, but their sister does not have insurance through her job. So I'll let sister use my insurance card in my place, which is not actually legal. So you letting someone else use your credit card or your insurance, that's identity swapping.
Both my brother and I have good insurance, and I don't think he could swap for me. But I think there's lots of opportunities. Family members, friends.
Yes.
That is definitely fraud. And if the physician or the medical practice hasn't ever met Jan before, they don't know what Jan looks like.
Right.
So I can see how that is troublesome it's illegal, but it's also a challenge for the medical practice to even know the fraud is happening.
Yes.
And what about the third bucket?
So the third bucket is prescriptions. So this would be filling prescriptions that were not needed. So forgery of prescriptions. It can also be diversion. That means taking legal prescriptions and then diverting them to someone other than who they were intended for. For example, if I get a prescription for such and such, but then instead of using it, I go on the black market and sell my drugs to somebody else. Sometimes you hear about that happening with older people who are on a fixed income, and they struggle to make ends meet. And so they really do need that medicine, but they also need money to pay the electric bill.
Yeah. No, I get that. Now, aside from billing and like the phantom billing and the ID swapping, what are some areas where you see in private medical practices and small business in general where you're seeing fraud happen?
So basically, in the clinic, there's two main processes or cycles, if you will. So there's the AR, accounts receivable, and sales cycle. That's seeing the patient pays copay or other balance. And they will do that often through the front desk, and then it gets sent off to the insurance, all of that side. Then there's accounts payable side. That's with your vendors. So that would be things like purchasing medical supplies for the clinic. So have seen it with both. On the accounts receivable side, I see it a lot with the front desk of not having good controls around who has access to the information as well as physical cash. And then on the AP side, I've seen it with things like setting up a fake vendor that sounds legitimate but isn't actually one we use, and then recording a bill that really isn't due to us.
So on the accounts receivable side, what things, Sarah has a balance of $30.
Yes.
I come in there and pay it. So potentially you're taking possession of my cash or you're stealing my credit card information. The other one would be, maybe if there's another bill and you've pocketed that, or you've given me a credit memo, but you've actually taken my cash. Talk to me a little bit about that.
So on the accounts payable and the vendor side, like purchasing supplies, for example, what fraud might look like here would be if someone just slips their own personal bill in. So you have the medical practice working just fine, but the bookkeeper enters their own utility bill or something very small that they don't think anyone will notice. And then they set up a new vendor, they set up payment information and direct the payment to either go electronically or a check through address to go back to them, so that they can pay their own personal bills.
Yeah. And it's even harder when it's Spectrum, AT&T, bills that you would normally see come through a medical practice, and not having the diligence on the account numbers and some of those reconciliation pieces.
Yes.
What are some internal controls that practices could put in place to help prevent some of this type of fraud?
Well, to understand that, let's talk for just a moment about the types of internal controls. So to have good internal controls, you need to understand what you're trying to work around. So internal controls relate to each of the processes. So the two main ones that I mentioned are accounts receivable and sales, and then AP and your vendors. So, but each of those, there's four main roles, if you will, of who does what. And so your internal controls want to make sure that those roles are being filled well.
Okay, walk us through those.
Okay, so those roles are authorization, custody, record keeping, and then reconciliation. So those are the four. So authorization means who has legal access to authorize something. So that would be like check signers. So for example, you need to be very careful about who has access to your bank to sign checks, to make withdrawals, those kind of things.
And this doesn't even have to be physical things. It's also who has the full account numbers. And because we're doing so much in a digital age, who's authorized to allow for ACH payments. I actually shudder when I think of someone like physically signing a check, because there's so much technology out there. But you still need the same type of controls even around the technology.
Yes. So one internal control that companies can do there without having to hire a huge staff would be if your bank lets you set up to have two people authorize for significant draws. So many banks will let you go in and have one person initiate a transfer, and then another person has to log in with their user ID and they can approve and release it.
And the reason that's a control is because it's generally hard to convince two people to commit fraud.
Yes.
Not that it can't happen, but
Less likely.
it's much less likely. And I would have to loop you in on my fraud and, work
Yes.
together with you for us to make that happen together.
Absolutely.
And I'm very honest. So Jan, no, I'm not committing fraud with you.
That's good. I have too much to lose. Absolutely not.
Okay. The second one was custody. Tell me a little bit about that.
So custody refers again to having physical access.
Okay.
So if you're talking about the front desk, for example, sometimes people do pay their $5 or $10 copay in physical cash. It's becoming less popular. It's more about credit cards now. So in that case, custody would mean having access to credit card numbers, for example. Are your front desk people writing down the credit card numbers and entering them, or are they entering them right then? Or if they are writing them down, are they shredding those numbers at some point so that they can't be used maliciously later?
Sure. And for physicians, if you're getting those emails about PCI compliance, that is exactly what they're talking about. I think custody can also mean a little bit of the IT access. I know we're talking about physical things, but you can set up controls on the back end of who has access to what. There's a lot of times we copy over because that's what the prior person's access was. And really, we probably need to be a little bit more discerning. Like they only need this access, or, instead of through the full process, we're going to skip one so there's an approval and things like that. So the IT access and controls is just as valuable.
Absolutely. So when someone's initially hired, you should evaluate not just what they're going to be physically doing, but what kind of IT access that they need to complete those tasks in your systems. But then at least on an annual basis, if not sooner, and as well, if they ever change roles, you'll want to reevaluate. So do they need access to everything? Another compensating control, if you will, is cross-training multiple people on processes.
Okay.
So one of the things that is often noted in fraud is that there was this one person that knew how to do this thing and they wouldn't share power.
Well, and that person was never sick. They never took a vacation. Those they seem to be, quote, the loyal employee because they want to own, like, I'm helping the team. It's too complicated for you to know how to do this.
Right.
And then they never miss work. I can't tell you how many cases we've read in accounting that those are really the red flags. And you think like, this person is just being nice or they're such a hard worker. And it's actually a fraud flag. And it doesn't mean the person who never takes vacation is committing fraud, but you do have to ask yourself, like, is there something that they have to click a button each day to keep this thing going without someone else covering their job and maybe detecting the fraud?
Yes. If no one else knows how to do that, then no one else can monitor their activity. So making sure, not just for fraud, but just good business practices. If they come in sick one day, you want somebody else to know how to do that process. So the authorization, custody, record keeping, we've touched on that briefly, but record keeping refers to everything in the system. So having the ability to enter credit memos for customers or to enter credit memos from vendors, for example, then though that's something you want to be careful about who has access to do.
Well, and from our standpoint, I go back and click a few buttons and see the audit trail so I can be like, who entered this or what were they doing?
Yes.
That's always one of my favorite pastimes from accounting. And then the fourth one is the reconciliation piece. And obviously this is a really big piece for us accountants. This is what we live for. But tell us how that could be a control deterrent or a fraud deterrent.
Absolutely. So as simple as it actually is, doing bank reconciliations, that's one of the first things that I look at when I'm reviewing financials for a company. So a bank reconciliation or a reconciliation of credit cards, then it lets you see a third-party document. So like your monthly checking account bank statement, first you want to make sure that that statement balance is actually tying to what was entered on the reconciliation in the system. and that the number didn't get fudged at all.
Okay.
And then look for things that aren't clearing. So if something has been sitting out there for multiple months, it's maybe a small balance, but it's not going away. It's not resolved, and it should be. So, for example, credit card transactions should clear within a couple days.
Yes.
If I see one that's 2 weeks or a month old, I know something's wrong.
And it doesn't always mean fraud when you're looking at the
Yes.
reconciliation. Sometimes it's just an accident in the system or someone double entered something,
Right.
but it is your first clue and kind of like
Yes.
pulling on that string to it's the notification of like, you need to do more research around this.
Yes. On the checking account side, if I see that there's an outstanding item and then it clears the next month, but there's an amount for the same amount or very similar that keeps popping up over and over, then it makes me think, are they just rolling a problem forward instead of actually solving it?
Yeah. If you were a business owner, what would be some of the reports that you would look at on a monthly basis?
So beyond the bank account reconciliations and credit card reconciliations, I would look at change reports. So every system is going to have some sort of audit log, as you mentioned. And so one of the things I did with another company, publicly traded, was monitor the vendor master file.
Okay.
So this means the access to vendors' addresses, their billing information, some of that boring stuff.
It's really boring. I know.
It is boring, but looking to see just, are there new names popping up that I don't know?
Yep.
Like, or we already have a vendor set up. Why is there another one with a very similar name? That would be a red flag. On the customer side, are there patient names or customer names that are coming up that I'm not familiar with?
Okay.
Yeah,
I think from customer/AR side, those lists are really long for medical practices. They're looking at their AR by patient as well as insurance company. And I think that's a good opportunity to have key performance indicators of working with their billing person, either internally or externally, and seeing how that's changing month over month. Or, this person told me they paid their bill, like, why is there still a balance? And sometimes it's the insurance denied. Sometimes it's, the patient's forgetful and they didn't pay. And sometimes it requires a little bit more research. I was thinking, like, if I was to commit fraud, what would I do? And it would totally be on the accounts payable side. I would create a vendor that's similar to what already exists, probably like a lawn care company or something like pest control, something really boring that no one really thinks about. And I would either create a duplicate vendor or send in a fake bill, because that is releasing the money.
Yes.
And that's part of the normal process. So looking at this vendor change reconciliation or change report, as well as that reconciliation for new vendors, would potentially catch some of those types of things.
Yes. And one of the things that we look at here at Webb CFO when we're reviewing for preparation for filing 1099s annually is we look to see if there's duplicate vendor names that need to be merged together.
Yep. We do that a few times a year so that we're ready for January.
Yes.
So that is part of our process. I guess, how often should a medical practice conduct some type of internal review? I mean, they don't get gap audits, and gap audits are not designed to catch fraud. That's like part of the CPA code of, that's not what we're necessarily looking for. But what are some, they're looking at their monthly reports. Do they have to have an outside person, or should they randomly select different things to review?
So it depends on what level of review that's needed. So at a minimum, on a monthly basis, they should be looking at their financials. And specifically, that would be your profit and loss for your income statement. It would also be your balance sheet. So as a bare minimum, I would start there of having those two reports side by side and having each one organized into monthly columns so that I could see change month over month.
Yes. And for our QuickBooks users, this is a drop-down feature. It's a push-a-button report, no magic necessary. So
yes, very straightforward. So that would help me to see if there's any unusual swings of something that I'm not looking for. Because if fraud happens, it has to show up in the system somewhere at some point.
Yep.
So I would start there. And then depending on other factors, I would do more or less. So, for example, if you have had problems in the past, then your risk of misstatement might go up. Might want to be more cautious, and it could look like once a month picking 5 accounts and tracing them through. If you have new employees, it might be picking a few transactions from that employee, maybe once a month.
Yeah. And we don't expect physicians to be auditors.
Right.
I think, if I was counseling a physician to do this themselves, it would be more of a discussion with their bookkeeper or their billing department or maybe their practice manager. Tell me a little bit more about this process. Show me this. I'm interested in learning a little bit more about this. You're not always like looking for fraud. And you do kind of need to know these things. Like, what if your person just quits one day? You don't have to know how to do it, but you do need to have a general understanding of what's happening.
So I would recommend that they use the tools that they already have first. Yep. So that could be things like reports from QuickBooks or other software that they could run with a push of a button that look at quickly.
Yes.
I would not expect them to spend a crazy amount of time doing this. You want to build in things that are manageable.
Well, and there are softwares that help you with this. So one of the features that we use often is Bill.com, and it actually has an approval workflow.
Yes.
So money isn't left with, again, you and I aren't committing. I could convince you to commit fraud. No. But having that other person as part of the approval workflow is definitely a deterrent. And it's a record. It's hitting a lot of your things, record keeping, the audit trail, as well as segregation of duties.
Well, and one extra feature within Bill.com is that you can send an invite from your Bill.com to a vendor. They accept it and enter their payment information without you ever seeing it, and then send it back so that it creates this secure link.
Yep. And then I'm not sharing my information with everyone.
Yes. Also good.
Also good. Tell us a little bit about the different insurances that are available for practices. Is there anything that really, is there fraud insurance?
There is actually. There are several different types. So one of the things that people may have heard about recently is things like data breaches.
Yes.
So
sadly, yes.
Everyone has heard about this. And every year there's multiple large companies that will have a data breach. They'll talk about people's personal information getting leaked. So that falls under the realm of cyber insurance.
Okay.
So it would be information leaked through data breach. If there's hacking that has gone on, that would be something. Everything IT and internet related, if your business goes down for a while and you're not able
business disruption?
Yes.
Okay.
That would be something that cyber insurance would protect against. Then there's also something called fidelity bonds, also known as employee dishonesty bonds.
Oh, so sad we have to have these.
It is sad, but better safe than sorry.
Sure.
And so the fidelity bonds is basically insurance against if there's an internal employee that does something that they shouldn't and it hurts the company. So those fall into 3 main buckets. So one is going to be your services. So things like janitorial services, you can have an insurance bond for that. Another is going to be just a standard employee dishonesty, which covers anything that they might do internally.
So like if they paid a fraudster or they've, paid their cousin for a fake invoice or something like that.
Exactly.
Okay.
Yes. So it would cover against those. And then the third is ERISA bonds. So since 1974, that has actually been a federal law that any company that offers 401k plan or other retirement plans have to, at a minimum, buy an ERISA bond that covers at least 10% of the funds that they dealt with the prior year. So that when people are putting money away, they are protected against fraud.
Yes. Well, Webb CFO has an ERISA bond, but we also make all of our 401k payments on behalf of our employees.
Absolutely.
We're not fraudsters. I hate payroll fraud. I feel like that's stealing from your employees. That's one of the worst ever.
Yes.
Well, let's talk about, as we're kind of wrapping up, what are some recent things that you've seen? Payroll fraud, and not necessarily from the employer, but from employees. I've gotten, hey, I actually got one from you, I think about 18 months ago. Hey, Sarah, I'm going to change my banking information. Here you go. And I'm like, this is odd. Jan doesn't change banks often.
Haven't
I feel
moved.
like hasn't moved. So I'm just going to pick up the phone and call her. And you're like,
Yes.
no, I did not change banks. Please do not pay someone else. And
Right.
so that actually happened to us for
Yes.
people that we run payroll for many times. And so we created a payroll change form that has to have a real signature and a phone call. People are so hesitant about picking up the phone, but that's one of the controls we put into place because we were seeing lots of payroll phishing. Nothing got frauded, but we were definitely attacked, if you will.
Well, I love that control because it's taking two different sources of information and making sure that they tie. So you have a written form that is signed, and then you have verbal confirmation. And so anytime you're taking multiple sources and tying them together, then you can feel a lot more confident.
Yeah. Have there anything recently that you've seen?
So I've also seen where someone in the medical area takes payments from a customer, and then because they didn't have good internal controls around who had access to what, a cashier would take information from a customer, take their copay and balance payment, record it in the system as a credit memo on the patient. So the patient is looking at their bill and they're seeing the balance go down.
I paid that. I gave them my $30.
It went down. I don't owe anything more. The cashier pocketed the money, and none was the wiser for a time until she got caught. So having access around the IT system, looking at a list of credit memos that are created each month, for example, might be something that you could do.
Yeah. Well, as we're wrapping up, what are one or two things you think private medical practices could put in place fairly easily to not necessarily prevent fraud every single time, but are definitely a barrier and a speed bump for people?
So with private medical practices, sometimes you can feel like there's so much that you want to accomplish, but you don't have enough hands to do it.
Yeah.
So use the resources that you do have, meaning so that would use your IT system to kind of run some of those reports so you don't have to hire a lot of people.
Right.
Set up a good system. And then if you choose to use a firm like Webb CFO to look over your records, that helps on the back end with monitoring.
Yeah. And that's what we do for a lot of our practices. Sometimes we're involved in their day-to-day and we're managing their cash and we're, in their system. We're like their whole accounting department. And for some of our other clients, we're the people doing the reconciliations. We're producing the set of financial statements. And sometimes we're not always thinking about fraud. Accountants kind of do always think about fraud. But a lot of it's just really questions like, hey, why did this happen? Or I saw that you spent 3 times as much in marketing or lawn care.
Right.
Was that intended? And sometimes the answer is like, yes. And then sometimes the answer is like, no, we probably should research that a little bit more.
Right.
Kind of when you talked about the financial statements in the columns, that's like my go-to report. And so if something is a little different, it doesn't mean it's fraud, but I'm at least bringing up the question to say, hey, is this what you were expecting?
Sometimes it's an honest mistake.
Sure.
So by looking at the data, you can get to the bottom of it and talk about, hey, if a mistake did happen, how can we prevent it going forward?
Yeah, absolutely. Well, hopefully this has been enlightening for our physicians. If they need any help, you can connect with us on our website. Jan's information is there. We hope that no one is being attacked by fraud and phishing schemes, but we know they're out there. And as part of one of our onboarding processes, we do a profit assessment. It's like the report card for practices. Yes. And a lot of that I call it the top piece because it's at the top of the page, but that's around your QuickBooks and your accounting system design. A lot of that is how to make it more efficient, but there is a fraud component to make sure that you have the right controls in place. And then the second part of it is that financial analytics. It's the nerdy forecasting stuff, but we're looking at that. Is your practice profitable? Does this make sense for you? Are there different things that you could do to make your practice even more profitable so you could serve more patients? Thanks for joining me on Profits in Practice. If you found today's episode helpful, be sure to subscribe, leave a review, and share it with a fellow physician. Your financial wellness is just as important as your patient's health, and we're here to help you thrive. Connect with us via our website at webbcfo.com. Thanks for joining us.